Hello and welcome to Play PKN, the weekly video bulletin of the top news stories on PKN Packaging News, Australia's media hub for the packaging industry. I'm PKN's publisher, Lindy Hewson, and this week's episode is brought to you by Ball & Doggett, Australia's largest distributor of printable materials for packaging and the creator of the Ecoporium by Ball & Doggett platform. Well, it's financial reporting season for the big end of Packaging Town, and there'll be a lot of numbers coming from me. So let's get started. Orora. Higher can volumes drove double-digit growth in Australia for Orora, supported by an improved product mix and cost inflation recoveries, and fueled by capacity expansion with new can-making facilities coming on stream. Can growth is offsetting soft performance in glass. Orora's sales revenue for the year was $4.29 billion, which was up about 5% on last year, but on a constant currency basis fell by just under 1%. Net profit after tax slipped by 1.2% to $185 million, but underlying net profit after tax rose by 8.5% to $203 million, or by 4% on a constant currency basis. Revenues in Australasia topped $1 billion for the first time, driven by a 2.7% growth in volumes, a 3.7% rise in the price of aluminium, which was passed through, and a 7% inflationary price rise. Brian Lowe, MD and CEO, said against the backdrop of ongoing challenging market conditions, Orora has delivered another solid result for the fiscal year 2023, reporting an increase in EBIT and earnings per share. More details on the business segment performances can be found in the lengthy story on our website. Next up, Pact Group saw its full-year revenue rise by 6% to $1.95 billion, but ended the year $7 million in the red as it booked a $53 million non-cash impairment on expected plant replacement in its packaging and sustainability segments. While reported net profit after tax fell into negative territory, Pact's underlying net profit after tax was $45 million, although that was a 36% drop on last year's $70 million. The group says its revenue was slowed from further growth by tightening economic conditions, softer demand from Asia, and weather events across Australia and New Zealand. Sanjay Dayal, MD and CEO, said it is nevertheless pleasing to report revenue growth despite challenging economic conditions. The impact of increasing inflation is reflected in softening demand for consumer products, which has impacted particularly on volumes in the group's packaging and sustainability segment, where it produces high-quality packaging containing recycled content. That's a big drive for Pact. Now, also announced by Pact this week, the company has also just sold half of its crate pooling and crate manufacturing business to Morrison & Co., a global infrastructure investment manager, for $160 million, which will help to pay down a substantial chunk of the group's current $500 million debt. Completion is expected later this calendar year, subject to regulatory and other approvals, and Pact will retain 50% ownership of the business via a joint venture. Then over to the world's biggest packaging company, Amcor. Shoppers fighting cost of living pressures by buying in bulk has caused an 11% downturn in profits at the packaging giant on revenues that were largely unchanged from last year, the company said. Amcor said the second half of the year proved challenging as consumer demand softened and customers continued destocking after the end of COVID restrictions, and it expects the first half of the new financial year to remain flat. But the group says growth will return in the second half of the new financial year. Sales growth in flexibles remained strong in Australia, and net sales were in line with the prior year across the Asia-Pacific region, with price mix benefits offset by lower volumes. Amcor CEO Ron Delia said, "While we expect current market conditions to continue in the near term, we have visibility to a number of controllable factors we believe will support a return to solid earnings growth in the second half of fiscal 2024 and leave us well placed to grow at our long-term trend of high single-digit rates thereafter." Well, in other Amcor news, the company has also entered into an agreement to acquire Indian flexible packaging producer Phoenix Flexible, thus expanding its capacity in the high-growth Indian market. Then on to some appointment news. Advanced recycling pioneer Licella has made senior leadership changes to strengthen and expand its team and its board as it focuses on the global commercialization of its pioneering CAT HTR advanced recycling technology, which we spoke about in last week's news. After 16 years as CEO, Dr. Len Humphries, who is also co-founder and co-inventor of the CAT HTR platform, will move move to the role of Executive Chairman. Alan Nicol, who is currently MD, will assume the role of CEO effective from the 1st of September, and Victoria Sherwood has stepped into the newly created role of Executive GM for Asia and Australasia. More detail on board roles and on Licella's advanced recycling plant under construction can be found on the various stories about Licella on our website. And then lastly, here's a bit of product news. Brisbane-based drinks company Mandatory Spirit Co. has released a range of Australian-made flavoured vodkas, each in a compact 1-litre bag-in-box and designed in collaboration with box manufacturer Newborne Packaging. The insert bags were produced separately by Scholle and Sig. The company claims the bag-in-box packaging reduces its carbon footprint by 8 times compared to using glass bottles. And then finally, Bega has launched a brand refresh and new look packaging designed by Bulletproof for its Simply Nuts peanut butter. The new packs have rolled off the lines at the factory in Port Melbourne, where the brand is manufactured alongside our favourite Vegemite, and are now landing on supermarket shelves across the country, so do look out for those. Well, that's all from me this week. For more on these and other stories, head over to our website packagingnews.com.au. Thank you, as ever, for watching.